I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Hi, I'm JB. Listen, we gotta talk here. There are two questions I keep getting asked all the time, and I mean all the time. I'm a part of a couple of investment groups, and these two questions keep getting asked all the These two questions keep getting asked all the time, and I gotta be honest with you, I'm a little bit confused about it because it doesn't really make that much sense to me. So, what are those questions? Well, number one is, when should I buy? When to buy a stock? When to sell a stock? What's the reason for selling? So, when should I buy? When should I sell? Don't get me wrong, these are legitimate questions, but I keep getting back to the basics behind the question and wonder, why did you buy the company in the first place? If you know why you bought the company, you should also have an idea of when to sell it again.
I'd like to buy 500 shares of Animotion Incorporated.
Okay. Now, before I execute this order, are you sure you understand the risks of stock ownership?
Absolutely.
We're in the money. We're in the money.
You heard the monkey. Make the trade.
The firm declared super-duper bankruptcy, which is terrible news for the company's only stockholder, Homer Simpson.
Oh!
But hey, I get it. Sometimes the original purchase was not really based on a deeper analysis, and when that happens, there's a real risk of having no plan for the specific company or the specific stock. I mean, that's how I have it with Tesla. When I bought it, I just knew this was going to become a great company with a bright future, and that's it. I went with the hype. Actually, I bought SolarCity back in the day, and when Tesla bought SolarCity, I became a Tesla investor, so what was my next move? What did I do? I let my emotions win over my brain and I sold my entire position. Biggest mistake I ever made. At that point, Tesla was a small startup with a lot of problems, bad customer service, pretty much everything was bad, except the product. I eventually bought back in when the Model 3 ramped and the future was a little bit more secure for Tesla. And at that point, I could see the path to profitability and the future prospects. The numbers weren't perfect as the company was not yet going real profitable, but I could see where it was going. The trajectory was clear to me. These days, it's fairly simple to value Tesla and see the possible gains in the future. However, Elon keeps starting new projects, new parts that really adds extra value, so the final price has yet to come. In my last video about how to value a stock, I used Tesla as an example and show how a $5,000 stock price in 2030, based on car sales alone, actually is possible. Well, I need to make a separate video on Tesla and the possible future. But do I have a sell target for Tesla? Well, not really. And this is where the topic of this video comes in: when to sell a stock. How do we know when to sell a stock? If the initial investment was made because of some fundamental analysis, like discounted cash flow analysis or price to book ratio or all the other different valuation methods and indicators, then you will probably have a good idea what the potential of the company is and what that would represent in a stock price. But let's take a look at the reasons to sell a stock. And yes, some of those are really obvious, but bear with me, not all will actually realize they are obvious. Reasons for selling your stock. 1. You bought it by mistake. 2. Price goes ballistic without any reason. 3. When it reaches your target. 4. The story, the sentiment changes. 5. The fundamentals change. 6. When you find a better investment. 7. If you need the money. 1. Mistake, wrong decision. Yeah, we've all been there. We get caught up in some hype or someone talks us into buying something, and before we do our due diligence and study the company, we just pile in. Here I could mention a few of my own, like Lemonade, Illumina, Hyliion, Maxar, Beyond Meat. Yeah, the list is long. Even me, a fairly disciplined investor, will also fall into these traps, and usually it's because someone I know very well and trust recommends it, and I don't have the time to check the company. The right thing to do is cut your losses and move on. Don't hang on to a loser, expecting it to become better. As Peter Lynch says, that sucker can actually go to zero. So get rid of your mistakes as fast as possible and move on to something better. Reason number 2. If the price goes ballistic and the fundamentals did not change, it has become almost a sin to take profits. A lot of people compare it to timing the market, but it's really not. It's smart investing. You need to trim positions and take profits when a stock goes ballistic and the fundamentals did not change. That's what we call sentiment, the trend, the hype. This, however, will always be a personal decision and can be different from company to company and how you are taxed on that profit. For instance, when Tesla went from $680 in August 2021 to $1,200 in November,
Sell it all today.
that would be a clear signal to sell, or at least sell some of the position. Maybe sell the initial investment and continue with house money. Yes, it can be dangerous, but fundamentals were not there for almost 100% rise in price. So even if it felt dangerous, common sense would be that it would get back to around 600, 700, maybe 800 price target. And what do you know? And it happened. Even if I love Tesla and believe it's going to get to about 5,000 price target in 2030, I will still sell when it makes such a ridiculous move. And just recently it went below, I think it was 800, maybe it actually went to 750 or something. So remember, there will always be cycles and opportunities. The big problem is if you are ready and have cash on hand when that happens. But you have to make that decision per company, and don't do it with the ones you plan to hold forever unless you have a high conviction you can get back in again. In the Tesla case, that meant putting the money in cash and keeping it in cash. Reason number 3. When it reaches your price target. I will almost always have done the math and have a pretty good idea of the future growth of the company I invest in. And if not, look at my video when to buy a stock and look at the spreadsheet where you can determine the value of a company. That will help a lot. And I will also write a short note in my stock tracker to remind me what the assumptions were, and I will add a target price too. There are some companies I will hold forever, and there I'll probably will not sell even if it hits the target I set. Maybe then I'll sell the initial investment and then let the rest ride. Funny thing is, that was my plan for Facebook, Meta. I had grown more and more tired of the bad news and the way the management was running the company, so I had decided to sell the complete investment in Facebook. But as it sometimes turns out, I was not quick enough, I did not execute, and the stock went in the toilet in just 6 months. It went from $382 to $187, and that really hurts. And especially hurts a lot that I already had made the decision to sell. Actually, that's one of the other reasons to sell. Number 4, the story, the sentiment changes. Well, what do I mean with that? Well, it's when the market sentiment or something that other than the fundamentals influence the company or the stock. I mean, revenue can still be good, profits can still be good, but for some reason a company falls out of grace and lose value because investors run away. That was kind of what happened to Facebook. People lost confidence. And it started back in 2018 with the Cambridge Analytica scandal, where data from Facebook were used for targeted political advertising. Facebook dropped 33% over that period. And this time Facebook got hit even worse. And it started with the Apple privacy settings announcement. And then later, Facebook saying they would focus on the metaverse. Oh my God. This impacts profit and guidance, and everything was lowered. We talked 45% drop. And even if Facebook still makes a ton of money, they suddenly became unattractive, at least in the short run. Investors simply lost confidence and found other companies to put their money into. I still believe they will recover and the price will come back in a year or two, But as an investor, you have to ask yourself, is there other and better deals around? And when a company can lose that much of its value several times over a few years, is that really a company you want to be in? So my decision stands. I'm selling the entire position at some point in the future. Facebook is currently around the $200 price, and my cost basis is $195. I believe it's gonna go about 20% up at least this year. And if it doesn't, I'm gonna sell it and use the tax to offset my gains. I am getting rid of the company. Another good example is a Danish company called Carlsberg, ticker symbol CARL.B. It's the 4th largest beer company in the world. They were doing great, even with the COVID, everything was on track. But unfortunately, this company has a large stake in Russia, and with the crisis at the moment and the sentiment shifting, investors won't support that company. So even if Carlsberg is a great company and the business is good, they just became collateral damage in that crisis. So this was another sell for me. The time it will take for them to get back on track will be years. And with that type of business, it's not known for double-digit growth. Reason number 5. When the fundamentals change. Well, this one is rather easy. When revenue, profits, or future earnings of a company is going the wrong way, or at least not as fast as you want it to, then maybe it's time to sell. Intel is a good example of this. They were doing very well and had a nice growth rate, and the closest competitor, AMD, was not getting real traction. This was back in 2013, 2015. But then in 2017, the OEMs, the computer manufacturers, realized that AMD was a pretty interesting deal. And in 2017, AMD grew revenue 3 times faster than Intel, and profits grew by a whopping 87%, while Intel only grew 8%. Intel dropped the ball and thought they could take it easy in the R&D department. But by now, the large PC manufacturers saw AMD with comparable products at a lower price. Suddenly, Intel's sales did not grow that much, and they also had to ramp up R&D and investment in new factories and manufacturing, so profits fell too. AMD started its growth and grew larger and larger with an average revenue growth rate of 32% in the last 5 years. Intel had 6% growth in the same period. And AMD profits grew 20% while Intel grew 8%. And yes, I know, Intel's revenue and profits are around 5 times larger than AMD, but the growth has slowed down to almost nothing, and AMD's margins are almost 10% higher. And now with the ARM CPU, it's gotten its revival with Apple and others looking into that architecture. Intel is on a slippery slope and it's going down. I sold all my Intel before this happened because I didn't really see a bright future anytime soon. The question here is this just a short-term problem or is it a more serious problem for the company? And that's, again, a personal choice. But for me, there are a lot of other good investments, so Intel is off my books. Maybe Intel is not a great example as they're still a good company, but it's just too slow for my thinking. If my expected earnings drop and I don't see them getting better soon, then I move on to something else. Which brings me to the next reason for selling. Number 6, when something better comes along. It's kind of like your girlfriend back in the high school, you know. You're with her, but if something better comes along, whoa, maybe you're out of here. That's a joke, honey, just so you know, okay? Joke. Well, you probably won't jump ship that easy, but it's kind of that thinking. I think some of the examples we have seen already are proving the point, but this point here is actually a more tricky one. It could entail you selling an okay company doing quite well, just because another company grows faster and has a brighter future. Remember, like Peter Lynch says, all companies have life cycles.
Where the companies are deteriorating. I mean, companies are dynamic. Behind every stock, there's a company. These are not lottery tickets. So you're trying to find the companies within the S&P 500 that are doing better. They're going from crappy to semi-crappy to good. That might take a couple of years, or they're going to grow for a long time. And you're trying to avoid the companies that are going south. That's how.
Last point. When we need the money, well, This one needs no explanation. Sometimes we just need the money for something. Maybe it was known beforehand, sometimes it wasn't. I'll just say, remember to have a small part of your money in cash for backup, unforeseen expenses and such. Usually I have at least 3 months worth in a reserve. It's not funny having to sell your great companies because you need to pay for some unforeseen expenses. So keep that in mind. It's hard to do, but it's a very good insurance to have.
I say when we sell.
Do you have any other reasons for selling, other than needing beer money, of course? Let me know in the comments. The bottom line. Any sale that will result in a profit eventually is a good sale, particularly if the reasoning behind is sound. When a sale results in a loss, and you know why that loss occurred, it's also a good sell. Selling is only a poor decision when it's dictated by emotion instead of data and analysis and knowledge. The key thing here to remember is that once you sell, and once the decision has been made and the basis of the decision was done through rational research, you should never look back or experience seller's remorse. And on that note, I'll say adieu and hope that you got some value out of this video. And if you did, please help me grow the channel by hitting the like button and maybe even subscribe. It's totally free. See you in the next video. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the night inning. There ain't no point in resisting.